get an analysis of the insatiable demand of investors into the AI data center story, but are they starting to question ultimately whether we can meet that insatiable demand, whether funding is there in the longer term?
No, I think it's quite the opposite. Investor enthusiasm is only growing. If you look at one of our ETFs, BAI, it's an actively managed AI ETF. It's brought in over $5 billion this year and is now the largest AI ETF in the United States. And a lot of the exposure that it is providing to investors is around that digital infrastructure layer, the hardware producers in the semiconductor space, the digital infrastructure owners, some of the data owners that are becoming really valuable in this explosion of AI models. And so there's a ton of investor enthusiasm. And I think there's a lot of expectations that revenues will match the expenditures, if not exceed them in the next several years.
But how much should we get comfortable with companies like Nvidia basically plowing their own revenues of today into hopes of revenue of tomorrow, basically funding their end clients?
I think it's beyond comfort. This is a necessity for some of the leading technology companies. They have a tremendous moat because they have low cost of capital. They have tremendous access to dollars. And they're able to really kind of leverage their own strengths, which is if you look at a semiconductor company, owning GPUs, owning this manufacturing process is really valuable in the semiconductor space. That's the shortfall that's needed by large language model developers. So this investment across the industry makes a ton of sense.
So going back to your iShares AI Innovation and Tech actively managed ETF, how much are clients begging you for more diversification when it comes to the AI trade? Because we have put so much stock into a few names.
There's a lot of ask to go beyond the Mag 7. I think people understand the Mag 7 story. They understand why these companies are so successful in the AI space and why they're leading it. But they do want to know what's beyond that. What are the other semiconductor companies? What are some of the data owners? What are some of the companies that aren't necessarily a consensus view as an AI company, but are involved in the space? And so that's where an actively managed fund, I think, can provide a lot of value to investors is by, yes, it's going to have Mag 7 exposure, but beyond 2/3 of it is going to look beyond it and provide kind of the next names that are going to rise in this ecosystem.
And are those names rising in the United States? We've also just seen President Trump alongside Jensen Huang and many others go to the United Kingdom to talk up an investment there. Are we seeing more names being added to the ETFs? They're coming from Europe, coming from Asia.
It's a global theme, but predominantly it is being led out of the United States today. And that's where we've seen some of these kind of new up-and-coming AI risers largely coming from. We still have a really robust startup environment and venture capital environment around AI. So the U.S. is very much at the center of this ecosystem, but it is a global theme.
So if the members of the ETF are largely U.S., are the investors in that ETF getting ever any more global, or is it predominantly U.S. investors that want to stick with this theme?
It's both. We certainly have seen a ton of global appetite, but some of the biggest investors today are coming from the United States. I think AI is not surprising anyone. Everyone knows globally this is the biggest area right now. They want to have access to the best investment tools to get exposure to it. Our ETF has really risen as the #1 tool in the U.S. for AI exposure.
What about other parts, like the energy side of the equation? Are there areas that eventually will do well? We're always talking about healthcare predominantly being a user of generative AI and therefore more productive.
I would say the energy space is coming up more and more with clients as they look to the AI trade beyond technology. Kind of what's the next shoe to drop? What's the area of opportunity? We've seen a ton of interest around different energy sources to be able to power the AI trade, whether that's nuclear, whether it's fossil fuels, whether it's renewables, really looking across the entire energy ecosystem. It's a way of looking at utilities from a more forward-looking lens. If you take the utility sector, but say, who's really going to grow here? Who really has this great 10-year trajectory because of AI? It's a more thematic cut of that space.
We've just been coming out of the United Nations General Assembly. It does feel as though fossil fuels very much have to be put back on the map by President Trump, at least. Is that something you're seeing echoed by investors? They want to be recommitting once again after years of perhaps rebalancing, moving towards renewables, looking at cleaner forms of energy?
It's across the entire energy value chain. I think you have to look at there are going to be energy fuels that are going to be really necessary. There's going to be energy producers that are really necessary. And there's energy distribution that's going to be really necessary in this AI theme. And so I think people are looking very broadly at where is this going to come from.
Every now and then, the market goes through moments of anxiety, whether it's about the fact that maybe we've got this revenue mismatch when it comes to compute funding, whether it's about actual productivity gains with the MIT report that came out last month. Are you seeing any anxiety pull back in actual fund flows wanting to go into AI more broadly?
Like I said, our AI fund flows have been accelerating recently, so we're not seeing a lot of anxiety. Look, this is a long-term theme. This is a bet for the next 5, 10, and beyond years. I'm sure within that time frame, there will be bouts of anxiety. There will be questions around what the valuation should be. But if you take a long-term view of artificial intelligence, we believe this is going to be one of the most powerful drivers of the markets for the next decade and beyond.
Okay. And more broadly, when we're thinking about fundamentals, how much do earnings matter for your portfolio managers, but more broadly for the investor sentiment too?
So they matter, but when you're looking over the long term, it's more about what does the earnings say about the direction of travel rather than what's happening today. There's not a ton of concern about what is your revenue today if you're a large language model developer. What we prefer to see is, have you gotten more paying subscribers? Have you developed the best model? Are you starting to see more penetration in the corporate world where you're going to have more, more ability to spend on these technologies? The direction of travel is what we're really looking at in the earnings.